Nvidia shares are down once again at the pre-market today. Investors cooling on the AI giant in the latter part of last week. This morning, you can see the stock off by about 1.8%. Still, month to date, the stock's up 13% and a much bigger run if you're looking year to date or the last 1 year. Joining us right now with his take on the stock of the moment is Ray Wang. He is Constellation Research founder, chairman, and principal analyst. Hi, Ray.
Hey, good morning.
You've got a $200 price target, and you say there's an entire list of 7 reasons why you are convinced this stock is going to get there. Why don't you lay out the broad argument?
Well, Becky, there's 7 modes that are important on why the stock will hit 200. First is a visionary-led CEO, and that's very, very important. As you've seen in the Valley, those are the ones that have led, like the Larry Ellisons of the world, the Scott McNeelys, the Mark Zuckerbergs. The second one is the high barrier to entry. There's few competitors that can come into this chip market, and it takes a long time to get a chip to market. And if you can do that, and if you succeed, and then if you can actually get the right chip, that's a very, very hard thing to do. The third one is high switching costs. Once you're in, you're locked in because of the CUDA software. You're able to access the chips, the software, and the entire stack. You're going to be locked in for quite some time, and they've got quite a lead in terms of doing that. And of course, Nvidia's had dominant market share, and I think that makes a big difference because they've been in this market for quite some time, and the competitors are behind by 24 months. And then, of course, we're only seeing 1/10, maybe 1/100th of the product roadmap that NVIDIA has out there. And that's really exciting for those who actually have some insight into what they have next, because it's more than just chips, and it's more than just what's happening in software. That ability to go from silicon to all the way to the end side, that's where we're going to see a lot of the innovation. And of course, the ecosystem has made the GPU a default standard. It's the standard of everyone's looking to for AI, from inference and testing. And of course, the numbers don't lie. I mean, we're seeing some amazing growth here that actually matches the PE ratio, and that's what everyone's looking at. They're trying to figure out how this is going to continue, but gross margins of 78%, 262% growth compared to a year ago. This is going to continue for at least the next 18.
Over the past 5 years, Nvidia has given investors returns that can only be described as phenomenal. The S&P 500 increased by just 80%, but the stock increased by 2,490%. Even better, that performance might be true in the upcoming years. As companies invest in artificial intelligence infrastructure, Nvidia should profit. In fact, in the not-too-distant future, they may become the 3rd largest shareholder in the $3 trillion club, after Apple and Microsoft. What investors need to know is as follows. With its current market value of $2.7 trillion, Nvidia would need to see an 11% growth in shares in order to hit a $3 trillion valuation. That might occur by 2024's end. My justification is straightforward. Companies are investing heavily in artificial intelligence, AI, and Nvidia GPUs are the industry standard for accelerating complicated data center workloads like AI. Take the following 5 major cloud computing companies, for example. JP Morgan Chase expects that this year's capital expenditures, CapEx, will total $181 billion for Alphabet, Amazon, Meta Platforms, Microsoft, and Oracle. This suggests that CapEx investment increased by 36%, a significant increase from the 10% growth seen previous year, mostly as a result of the expansion of AI infrastructure. Nvidia will gain more than most of the companies. With excellent fundamentals and big growth anticipated, analysts are putting Nvidia in the limelight. We will discuss this question in today's video. But first, if you want to stay up to date on the latest news on Nvidia and the stock market, subscribe to our channel. We provide daily updates about the biggest changes and market catalysts. So click the subscribe button and hit the bell icon if you don't want to miss the newest market updates. All right, back to today's video.
America Securities Senior Semiconductors Analyst. Vivek, great to have you with us.
Good morning,
I was reading your note from just a couple weeks ago, or last week. It could be. It's saying that NVIDIA is relatively under-owned, which I thought was really surprising. The assumption is that, the Mag 7, particularly NVIDIA, is probably the most owned trade on Wall Street. What have you found?
Sure. Thanks, Melissa. I think the first thing to realize is that we just went through what is probably just phase 1 of large language model deployment. Now we are going to start phase 2. That's when we will see a lot more optimized models both getting larger in scope to increase their accuracy, but then also getting a lot smaller and optimized. And that requires a very flexible set of hardware, software, silicon. And that is, I think, the ecosystem NVIDIA is pioneered and created. And they are just at the start of their Gen 2 product, Blackwell, which will really start to kickstart this phase 2 of AI. So I think that's very important to realize that even though the numbers have gotten very big, we are still at the start of this deployment phase. When it comes to ownership, what our strategy team, led by Savita, have found out is that if you take a snapshot of active long-only fund managers across the US, that yes, a lot of them own NVIDIA, but the weightage with which they own NVIDIA stock relative to its weight in the S&P 500 is essentially just market weight. Right? So even though it is one of the fastest growing stocks in our coverage and across technology, it's not actually among the largest holders.
According to Mizuho Securities, the chipmaker has a 98% market dominance in data center GPUs and a 95% market share in AI processors. In addition, Nvidia is becoming more popular in other data center hardware markets. Its InfiniBand/Ethernet networking solutions are now a multi-billion-dollar industry, and its Grace Central Processing Unit, CPU, is rapidly approaching multi-billion-dollar status. In fact, Nvidia may surpass the $3 trillion mark when it releases its second quarter earnings on August 28. For each of the past 4 quarters, Wall Street has underestimated growth in sales and profitability. According to CFO Colette Kress, demand for Blackwell and A200 GPUs is significantly outpacing supply, and we anticipate that this gap may persist long into the upcoming year. Compared to the Hopper generation, Blackwell GPUs are cutting-edge processors that can speed up AI training and inference by a factor of 4 and 30, respectively. Additionally, they use less power, which results in a 25-fold decrease in the overall cost of ownership. The Blackwell architecture platform will probably be the most successful product in our history, CEO Jensen Huang recently informed investors. Moving ahead. For the next 3 years, Wall Street projects Nvidia's earnings per share to increase at a rate of 34% per year. Makes its $3 trillion valuation easily attainable, and its current price of 66 times earnings seem pretty realistic. In fact, even if shares sell at a more reasonable 45 times earnings, Nvidia would still be a $4 trillion firm in 2026 if earnings climb as swiftly as analysts predict. TSMC's second biggest client last year, according to reports, was Nvidia, which contributed 11% to the company's revenue. Since Apple has been using the Taiwan-based foundry giant's production facilities to produce the CPUs it uses in iPhones, iPads, and MacBooks, Apple continues to be TSMC's top customer. But given Nvidia's emphasis on boosting its capital expenditure budget in order to grow its production capacity, there's a high likelihood that TSMC will receive more business from the latter this year. During its most recent earnings conference call, TSMC's management mentioned that advanced process technologies will receive between 70% and 80% of the capital budget. These sophisticated process technologies apply to chip nodes that have a size of no more than 7 nanometers, which are the nodes that NVIDIA uses to produce its well-known artificial intelligence, AI, chips. For example, TSMC's 5nm technology was used in the production of NVIDIA's H100 Hopper GPU. The chip company apparently uses TSMC's 4nm process to produce its most recent Blackwell GPUs. Furthermore, strong demand from NVIDIA and other customers has reportedly kept TSMC's 3nm chip production line full until 2026. It follows that TSMC's decision to raise its capital expenditure forecast for the entire year and its intention to allocate a significant portion of its capital to NVIDIA consuming advanced process nodes are not surprising. Furthermore, during the conference call, management stated that it plans to more than double its chip on wafer-on-substrate CoWoS packaging capacity this year and the next year. CoWoS is a cutting-edge packaging technique utilized in the production of AI circuits. NVIDIA purportedly purchases half of TSMC's CoWoS capacity, making it one of the company's top customers. Thus, an increase in co-US capacity is encouraging for Nvidia since it should enable it to produce more AI chips and meet the enormous demand it is seeing. Nvidia management noted on its May earnings conference call that demand for its Blackwell processors and H200 AI GPU is significantly exceeding supply, and we anticipate that this trend will continue well into next year. The foundry partner of Nvidia plans to increase its capital expenditures in order to increase capacity, which could result in higher than anticipated growth from increased chip production. AI remains worth watching segment for global investors in 2024. But how do you keep up with the AI sector and others that you may be interested in? I recommend trying Moomoo, a sponsor of today's video. Some features to discover stocks with investment potential has blown me away. You can use the industry chain to find companies throughout the entire AI sector, or use the stock screener to filter stocks according to your investment strategy. Having the option to set parameters like industry, market indicators, financial indicators, technical indicators, and more. Ultimately, discover potentially undervalued stocks and those that appear to show buy signals to help inform your strategies in an effort to capitalize on AI-related opportunities. At the same time, Moomoo is one of the cheapest trading platforms I've found. It offers zero commission on stocks, options, and ETFs. After comparisons, I've discovered the fees are among the lowest. Right now, new users who open an account using my link and make a qualified deposit can get up to 15 free stocks, enjoy a limited time 8.1% APY on idle cash for 3 months, and earn up to $300 cash reward for transferring in their portfolio. These rewards can be earned together, so don't miss out. And thanks again to Moomoo for sponsoring this portion of the video.
Describe the pullback over the last week.
Oh, the pullback is coming at a macro level. People are worried about the consumer side. People are worried about where the economy is going to head, and they're doing some profit taking before the summer. So I think it's a good time to buy the dip.
Ray, there are some people who look at this and say, okay, this is the equivalent of what we saw with Cisco back when the internet phenomenon was taking off in the late 1990s. How is this different?
I think this is different because when we were looking at Cisco, when we were looking at where Intel was and where Microsoft was, that era was really built on those three companies. I think Nvidia has learned from those lessons and realized that they have to go much broader than just being a separate company building just chips. What Nvidia has done has built partnerships that are going to last the next era. And so in the age of AI, we actually believe AI begins and ends with Nvidia because they've actually built out a roadmap that is much more encompassing than where networking was or where software was. They actually see that end-to-end vision, and that's one of the interesting things with what we see with Jensen's overall vision.
Today, the stock's at 124. Your price target, $200, is the next 12 months?
It's the next 12 months, correct.
There are other signs besides TSMC's most recent performance indicating investments in semiconductor capacity are getting better in order to fulfill the increasing demand. Recent results from the massive semiconductor manufacturer ASML Holding also suggest that foundries plan to increase their financial investments in order to enhance the production of sophisticated chips. It is not unexpected that analysts have been raising their growth projections for Nvidia, given that the market for AI chips is outpacing supply, especially because the company's supply chain is probably going to get better. It is anticipated that the business will bring in $120 billion this fiscal year, $161.5 billion in 2026, and $189 billion in 2027. The bottom line of Nvidia has also benefited from this improvement in the company's top-line growth forecasts. With strong growth in the company's earnings predicted for the current fiscal year and beyond, with $1.30 in earnings per share at the end of the previous fiscal year, Nvidia's earnings might more than triple in the next 3 years. Because of this, investors seeking for a growth stock now would be well advised to purchase Nvidia, which is currently trading at 45 times forward earnings, a slight discount to the average of 46 for the U.S. technology sector, especially considering that, based on TSMC's most recent results, it may deliver stronger than expected growth in the upcoming quarters. Ahead of the company's July quarter earnings report and October quarter projection, Piper Sandler analysts increased their target price for Nvidia stock from $120 to $140 on Monday, maintaining their overweight rating. The analysts stated that they believe Nvidia's solid commercial trends from the previous year would continue, helped by the official introduction of the Blackwell architecture in the October quarter. The investment bank expects robust demand from cloud service providers, CSPs, corporations, and sovereign organizations, and sees the introduction of the Blackwell architecture as a catalyst for a new era of growth. Analysts predict that demand will greatly exceed supply for Nvidia's future B100/B200 products. According to Piper Sandler's bullish scenario, a rebound in networking supplies might allow Nvidia to announce revenue for the July quarter that surpasses estimates by almost $2 billion. The analysts continued, "In our opinion, Nvidia remains a leading player in the accelerated compute and Gen AI end market." Similar to this, Loop Capital analysts raised their price target for Nvidia stock from $120 to $175. Noting the possibility that the business may considerably surpass market expectations for both revenue and profitability in the upcoming fiscal year. With all of these considerations, Nvidia is unquestionably a great buy, especially if you're looking to invest for the long term because the company hasn't reached its full potential yet. What do you think about Nvidia stock? Is it a good buy at the current price? Please share your opinions with us in the comments section. And don't forget to let us know what you think NVDA is worth. If you're interested in learning what other companies, like Nvidia, have been up to lately, click on the next video on your screen. We'll see you there.